Hi everyone, and this is a special panel, a much smaller panel than several others. I thought it would be good to go a little deep into this topic. I probably need more of an introduction than the rest of the panelists, but very quickly, my name is Jyotsna and I wear two hats. One of a GP, I am the managing partner of Elevar Equity, and the second hat is that of being co-founder of NMAS, which was really set up to bring out something that we're all passionate about, which is the economic power of industrious communities. I'm not going to go into these organizations more. If you like today's session, I'm sure you'll look us up for more details. The quick context is I personally picked the three people sitting on the right side of me because I know each one of them has a wealth and depth of experience when it comes to these markets. In fact, I suspect I could have had a 40-minute conversation with any one of them and it would have been full of special stories and insights. But maybe as context, personally for me, this moment of truth for me started in 1999 when I visited a family in Jhansi. And it was interesting. The woman I met in the household had many children. And she said it with a smile that she probably ended up with more children than expected because not all of them died due to infant mortality. Vaccinations had kicked in. But she was struggling to pull them all together. But she had a smile on her face. They were figuring it out. Almost 20 years later, when I visited certain belts in Madhya Pradesh, Sagar, Damoh districts, etc., I see families like that one. But now those children have grown up and each of these families have multiple sources of income. This is one generation that has made a huge shift in the way we have understood Bharat, growing up, several of us. And I just feel it's important to bring out the new version of Bharat, which is more relevant today than what we all pictured towns and villages to be 20 years ago. That story, which went from Jhansi to Damoh and Sagar, highlights three main topics, and you heard some of that in the previous session. One is the multiple sources of income, which have changed the fortunes of many of the households, which are no longer below poverty line or struggling to make ends meet, but they are fighting for growth and aspirations. Second is there's a very unmistakable quality in these households, one of an entrepreneurial spirit, which today has been talked a lot in the context of startups, but when you hear some of these families, every sports person, honestly, that we spoke about here was an entrepreneur who fought and took charge of their own destiny and did not take compromises in quality for an answer. And that third point is the hunger for growth. Even wearing the GP hat, honestly, it is phenomenal to invest in markets that are hungry for growth and are willing to double down on themselves, right? So our thesis is the next 20 years, Bharat is going to lead the way for India. And here we are to talk more about this. I don't think people need too much of an introduction, but you know Raman as chairman and managing director of SIDBI. His passion for this segment is the reason we're talking to him today. Munish, who's currently leading all things Bharat Initiative for Access, will also talk a bit more about his experience. He's got a wealth of experience prior to this. And Utpal Isar actually decided to walk out of a large institution known for these markets, from ICICI to starting his own enterprise that goes even deeper, right? I suspect the proximity to customer is part of what drove that decision. But maybe I'll pass around the mic to each one of you. What I'd love for you to talk to the audience about is why you're doing what you're doing. What is it in your personal journey that brought about this conviction to double down? Probably a more personal note, and then we'll get into the market statistics a little later on. But over to you, Raman, maybe.
Thank you for having me here. And before I dive into the topic, I just wanted to sort of take a moment to applaud all of you here, because sitting at SIDBI Fund of Funds, I can only say that by committing 9,800 crores or some such number like that, all of you put together have raised an additional 56,000 crores from the market, which truly, if you ask me, is the reason why all of you are featuring in the Economic Times or Pink Papers every day. So I think it's been a tremendous achievement by all of us put together. So, you know, please do clap for yourselves. But getting back to really what I think SIDBI is trying to do is get those number of households into entrepreneurship. And honestly, when I saw your data, I could only think that you are probably doing even more than what Sidbi is doing. So, you know, it is truly amazing to read the sheer entrepreneurship, the industriousness of those households. And I can honestly tell you that I have seen it in various trips that I make, and I love to go into sort of, you know, the corners of the country. And one such, you know, very compelling story is these ladies in Ladakh, and they have come together as a community. But each one of those ladies actually looks after the Pashmina goat. And it is just the introduction of one person who came in from the plains as an NID design expert and settled in Leh and worked with these ladies. These ladies are actually taking their goats for grazing, rearing the wool, bringing it to Leh, and then doing the processing. Now, they brought in a bit of money and managed to get the machinery to do the processing themselves. And they have created an absolutely incredible brand called Looms of Ladakh. And I would insist that all of you do go to their website and spend your money and buy their products. It is fantastic. But the greatest part of their story is they are doing the entire work themselves. There are about 27 women there. And today, after about, I would say, 3 years of, you know, revenue that they have generated, it is their children who are not going to the Chandigarh and the Delhi, but are remaining back there in Leh, sitting at 13,000 feet and helping their mothers do this job because there is wealth created. So it is, you know, an unmistakable, you know, aspect of human life that when wealth is created, you will have everybody going in droves and wants to be part of that wealth story. So, you know, I believe that the data that you're putting together is fantastic. And as a banker, I think my next point really would be that how do we get this information in databases which is structured and which can then come across to all of us as bankers. Muni should obviously be, you know, sort of delighted to have information that can give us the due diligence of those people, because most of this community is probably non-GST registered businesses. Could be some of them in GST. But when we're talking about GST, it's still easy to do an assessment of their risk. But when you're talking about the non-GST registered entities, then you're really struggling for data. So I would really look at it as, I completely agree with you, the next 20 years, in fact, the numbers that we have got is in the next 3 or 4 years, we're looking at a demand for credit from the MSME sector, which is 30 lakh crore, 30 trillion rupees. And the entire MSME borrowing on date is 25 trillion rupees. So we're actually looking at more than double of what we've got. And how does that throughput go through is really the big question that we have to ask for ourselves. But I think it is phenomenal to see this sort of line of thinking. And I think what you're really cutting through is a lot of, you know, layers of traditional bank thinking, and you're getting down to where is the money, show me the money, and therefore there is a benefit.
Which, Munish, I think you had some thoughts. Would love to know what your moment of truth was when you decided to move into taking on a fairly massive mandate for Access, right? So.
Yes. It's working? Yeah. So first of all, thank you for having me here. And honestly, I've not seen so much capital in one room ever. Right? So many investors here. So, and I've been with Bharat Bank for about 2.5 years now with Axis Bank. And my journey about Bharat, or my passion, or my focus on it started actually prior to I joined the Bharat banking business of Axis Bank. So this was during the COVID time, and at that point in time I was managing director of an insurance company, and I used to run a life insurance company for about 7-8 years. And this was during the COVID time, and I started, you know, we started looking at, where is India going to go from here? And that curiosity started, pushing me in that direction, saying that is it possible to build something big in these markets on the back of the work that's happening, electrification, road network or the digital infrastructure, etc., etc. And we thought that there could be a possibility of doing something in a digital way because COVID actually brought a lot of this digital stuff into play. So at that point in time, I started traveling a lot into deepest parts of the country, and I went and lived in a few villages myself. There's one particular story that I want to tell you about. This was in the state of Punjab. There was a manufacturer and exporter in the state of Punjab, and in one lifetime, this guy actually used to sell kinus, those orange variants, on a roadside, thela or whatever. And today he's become one of the largest exporter of kinus from the state of Punjab, all in a span of 10 years, right? So this guy started procuring kinus, he used to sell in the local market, took some money, started investing in something, bought some land, bought some more land, and started growing more kinus, put up a factory to process kinus, then put up a factory to process kinu juice and whatever else, and all the variants, etc. And he's become one of the biggest exporters for. And that actually, brought me to a point which said that, if somebody can get the right kind of advice and right kind of technology and right credit at the right time, there's an opportunity for millions of these households or millions of these entrepreneurs to flourish in this country. And that's when, as destiny would have it, I just was chatting with the Axis Bank, and they said, why don't you come and do this for us in this place? And ever since I've joined Bharat Banking, and Bharat Banking is our initiative to connect the dots for Bharat customer across the spectrum of banking services, across the spectrum of financial services, right from microfinance to wholesale, and large part of it is actually creating ecosystems, large ecosystem where people can come and work. And one such ecosystem is we work with this company called CSCE Governance Services Limited, which is the Common Service Centers of Government of India. So there are about 650,000 of these service centers which are located across the country. And these are individual entrepreneurs who are actually providing government services or financial services to the locals in these deep geographies. And my travel has taken me to the deepest parts of the country, and I was in, and such is the power of these entrepreneurs. I was telling the story the other day, we were in some deep part of Gujarat, and in a rural unbanked area, there's a common service center fellow who is an entrepreneur in that state, and can you imagine the business that he runs there? He actually runs a business of sending kids to foreign universities in a rural unbanked area. Okay, and I asked him, I said, how many kids do you send every year to foreign universities? He said, I send about 150 kids to foreign universities on the back of credit, and and he has tie-ups individual, one single person. And I was telling my branch manager, and he said, look at this opportunity here. I mean, this is where India is, and this is where India wants to go. And many of us have come from possibly similar middle class or lower middle class backgrounds. And and from that point, I went to a nearest branch of our bank, and it was a rural unbanked branch. And I walk into the branch, and there's a branch manager sitting and a customer sitting in front of him, negotiating, guess what product? An education loan for his kids, right? So, so this is where India is changing, on the back of technology, on the back of credit that's available, the models that are being built, etc. The ecosystem approach of corporates or several such initiatives that are going. I think it's a large, massive opportunity for a country to capitalize on and lead to that sustainable growth that India much needs, and India much deserves too. So that's Bharat Banking, where we are trying to relentlessly work towards, using data, using technology, participating in ecosystem, etc., to bring credit and financial services to the doorstep of a customer in deep markets. And I think we are well placed to do it. Yeah.
And Munish, how much capital is behind Bharat Banking from Axis?
Well, we're listed entity, so I can't give you specifics, but a large amount of, so we have big investments in the area. So we have about half of our branches are in Bharat Banking area. Roughly about 30,000-40,000 FT full-time resources are devoted to building this. We are about 15-17% of the bank, and we think that there's an opportunity to create a bank, as big a size as the main bank in the next 5 to 10 years time only in Bharat. So
that speaks a lot.
That's the opportunity.
Got it. Great. And so now the entrepreneur himself. So you quit a large balance sheet and went entrepreneurial. What was your moment of truth?
Oh, well, you guys talk like, the epic opportunity has just been discovered. Okay? It was always there. Okay? You were not there. We were not there, from the formal sector, so to say. Over the last 20 years that I've been working in rural India, we've seen lots of transformation, but whatever we are doing today, in some part or the other, in some form or the other, existed earlier as well. We had lots of, bank branches, we had lots of informal lending, etc., going on there. Infrastructure was a challenge. You would get out of an airport in a state capital and the infrastructure would end, right about 2, 3, 5 kilometers out of the airport. Now it is much easier, right till the village doorstep, maybe except a few villages that the previous panel member spoke about. It's becoming much easier in terms of physical infrastructure. And of course, given the digital public infrastructure that is now available, it's much more easier for people like us to be able to give access. However, our thought process was very simply, going through these 20 years, that the big challenge that we see here is verticalization of offerings. So you say that, credit is one offering, risk mitigation is another offering, so on and so forth. But ultimately, if you look at these households, for example, one of my former bosses used to quote this example very well, is that, in a village, for example, or even here, somebody falls from a tree, a kid, and to take that kid to the doctor, the household will typically borrow. So you are replacing a health insurance with actually a credit product in that sense. So at a household level, it does not really matter too much. And therefore, we saw a humongous amount of change coming in. We focus on rural India and only on rural India, into these households, the middle class emerging very well there, differentiated from the below poverty line segment, again a very large segment, but the challenge with the middle class that we saw was that they got painted with the same colors as the low income segment, and therefore the solutions that were coming out, the offerings that were coming out were less than ideal for this, and therefore we thought it's best to move out and start a solution for the middle class aspiring households.
Your wish of the large balance sheets to your right?
Say again?
Your ask of the large balance sheets to your right?
Well, you'll get me into a fight, but...
I thought that was the idea, no?
No, but see, there are different capabilities that exist across, right? Whether it is the capability of policy making, the capability of institution building, the capability of giving access to capital, and the ability to absorb risk. That is on the right-hand side of me. What is here is the ability to do the last mile, to be able to sit with these households, interact with them, and really understand their requirements, their abilities, and really be able to design an offering for them. And of course, with the help of policy, with the help of institutions and capital and risk abilities, then be able to marry them together.
Excellent. Now, all of these anecdotes that you all heard are no surprise to us. We end up spending a lot of time traveling across smaller towns and districts, and we've heard tons of these stories. But I also realized that the stories themselves sometimes feel surreal, and not everyone feels it adds up to something large. So that's the reason why we worked. I mean, we had commissioned Praxis to come out with a report that feels a lot more tangible in terms of this opportunity. So for those of you who haven't looked at it yet, I would encourage you to look it up. We are talking about $8.8 trillion odd of core transaction value, which the best way I can talk about that is it's a number that is not less than that number that probably exists on the ground. We decided to go to the most conservative end of the estimates as we looked at things. But I think it's a fascinating market, and it's definitely business ready. And I think the best way to probably understand how business ready this market is to get all of your senses on what is it that you think was surprising during COVID, which people would have normally said, the segment is probably far too vulnerable, not ready for business, etc. Maybe some instances of where COVID surprised you, and maybe we can start with you, Utpal. I know you went through a soul-searching experience when COVID hit. You'd barely gotten off the ground, right? So.
Yeah, so the biggest part of a surprise, which was not actually a surprise for us, but when we put out these numbers month on month, it became a surprise for the rest of the industry actually, was the resilience of our households. And you spoke about multiple sources of income. The multiplicity of incomes, not all of which get impacted at the same time by the same event, is something that we saw firsthand during COVID. The other big surprise, actually the surprise for us, was the positive role that media played during the entire pandemic, which was that earlier, if there was a moratorium or any sort of a loan waiver, it used to get painted across as everybody's loan was waived. But here, there was very careful communication to everybody saying that the loan is not waived off, it is a moratorium, so on and so forth. Our surprise was when we started communicating with the households one-on-one, saying that, look, you have a moratorium, you can choose to take a moratorium of 6 months. However, what you do not pay now will get added, so on and so forth. Just to give you our data, and this is only us, 0% of our households took a moratorium for 6 months. 10% took for 5 months. And only 30% took a moratorium for 1 or more months between that. And that was the big surprise. And why this? Because we were able to really communicate to the households, saying that, sir, and data as they spoke about, saying that we know that your shop might be impacted, but you have milk income. And milk income, is regular. It comes to you every 10 days, so on and so forth. So our biggest thing coming out of COVID was the resilience of these households. Their ability to see a large, black swan kind of an event, come across on the other side of it, and then be able to continue the journey there onwards.
Great.
Yeah, so for me, there are 3-4 dimensions apart from the resilience which Utpal just mentioned. I think when we were going through that period, the first thing that we saw was that this entire penetration of digital and adoption of digital went altogether to another level in the country. I mean, it just forced people to possibly use those tools because it is not possible to go out, do physical transactions, etc. And I think that was a habit-changing, exercise that happened at that point in time. But that's one, and that's proved very beneficial for the nation at large. And the second thing is that what I'm saying. I was in last week. I was in a deep market in Jorhat. Jorhat is somewhere in Assam, and I was meeting a couple of entrepreneurs. And I was surprised to see that the number of people and these large businesses. I mean, turnover of, let's say, 10-20 crore rupees, 30 crore rupees, and they were small businesses during COVID time. They become a bit more possibly professional, digital, etc. But what was surprising was the willingness of a number of young generation people to go back and help their families, build these businesses, etc. is something that has changed. I mean, I'm seeing it increasingly. A number of kiddos who are going back and actually helping their parents, saying, okay, there's money to be made in this market, or there's something more we can do. And I was about a month and a half back, I was with a customer in Latur. Latur is 5 hours away from the nearest airport. And guess what? I met a businessman there who is actually running a business with turnover of $1 billion, right? And they are building a full ecosystem around it. And you can't imagine that you're seeing people like that. And what's happening in these markets is, you look at the number of other opportunities that come up, with all of this stuff, because economic activity is happening. And that is amazing, because number of private banking customers that customer was telling me we could build in Latur is not funny, right? So, I'm telling a private banking guys, why don't you open a private bank here in the district of Latur? So that is two. The third thing which has changed, I think, a lot more data has somehow been available, and the lot of stuff that the government has done, and I think that's another habit-changing exercise, is that instead of putting the weight on the burden on the balance sheet, running these, which Sidvi has done very successfully, running these guarantee schemes has actually enabled credit flow during COVID time into these markets very, very well. And that's another habit-forming exercise, because on the back of guarantees, etc., there's a bit more resilience, a bit more boldness that comes through, because you go out, you go and lend, and and the models have proved successful, and as a result of which you've been able to, credit flow to these markets have actually also improved quite a bit. And fourth is the the entire enabling infrastructure around this thing, both private sector and the public sector infrastructure. There are many things that I can talk about, which the government is doing or which private sector is doing today, which actually have come out as we have exited the COVID period, which is, giving a lot of depth to our activities, in terms of, data, or the data that you can get for customers, the work that, places like RBI Innovation Hub is doing, the work that we are doing as a bank, work that many financial institutions are doing, SIDBI is doing, Utpal is doing in these markets. It's actually, leading to a formation of hundreds and thousands of those small ecosystems, which are self-contained or self-sustainable in nature, which is actually leading to the larger narrative of, growth being fueled in these markets. And all of this happened beyond COVID, because honestly, before COVID, it was going on some track. And after COVID, suddenly the entire thing, and I think when we were going through that period, there were a number of these, articles or whatever you get on WhatsApp saying, an earth-shaking event has to happen in the life of a nation for it to start changing its orbit, and that's what's happened to us possibly. And that's what we are seeing and benefiting out of. Yeah.
Raman, maybe if you can also add, I know that women have emerged as phenomenal participants from an economic standpoint. So as you talk about this, it will be great to maybe throw in some statistics. I'm not a big fan personally of the women's labor participation, et cetera, being low, because what we see on the ground is very different.
So some statistics on, how COVID sort of played itself out. So under the 100% sovereign guarantee that was provided during COVID, called ECLGS, 3.64 lakh crores were the loans covered under ECLGS. We received claims, or let me say we received NPA markings to the extent of 17,000 crores. So that's just 5% of the total, loans given out in a stressed period. I thought that was remarkably low. And out of that 17,000 crores, which is marked as NPA, we've actually received claims of around 6,000 crores. That's it. So, what is happening at the banks, I can't entirely figure out, but maybe they're collecting, maybe they're taking their time. Now, our lending to the MFIs have shown that, the 90 DPD was well over 8% and 11% for some of the MFIs. It's all sort of come down to less than 4%. So, the resilience of this sector is remarkable. And I think, everyone here has spoken about it. It's obviously the credit demand has picked up. Now, the MFI sector is something that SIDBI sort of worked with very closely and sort of incubated a few of them in the past. But what is it that's happening today? And today we are really looking at so many more NBFCs coming in. So let me just give you a sense of the NBFC market, where we have given, loans or, for refinance or on lending to about 65 small NBFCs, where AUMs are less than 200 crores. Now, obviously, they're dotted across the country's landscape and they're all giving loans. Now, this credit demand is, I would say, roughly, for an NBFC, let's say, it's 24% interest or something like that. Now, as a, sort of challenge to these businesses, so, your epic households, my big question is, after seeing your data, and your data is very impressive, that how does a small business continue to grow if they're going to get loans at 24%? So I'm just putting that on the table. It's not that, as a country, we need to figure it out. So there are obviously several sources of loans. There is SHG loans, but that's much smaller. There's MFI, JLG. There is a host of persons who are now getting individual loans. And one of the experiments we ran, it started in COVID and then faltered, and then we've picked it up again. We've given about 2 lakh loans of about 1 lakh loan size each. So, the average ticket size is 1 lakh. We've given about 2 lakh such loans. It's obviously with partners on the ground, so there's some feet on the street, either it's a BC or an MFI. 75% of these are women borrowers. So, I can only sense that from the JLG stroke SHG, there is a gradual movement away from group loans and into individual loans.
And
now,
that's
I'm
where women have
sure
also
all of
kicked
them
in.
are,
Yeah.
part of your count of, whatever, 25 crore or 250 million that you're talking about. So, this is really where the credit uptake is massive. Let me just come very quickly to the point that Munish said. Our credit guarantee scheme, which goes under CGT MSC, now that is the largest micro and small loan guarantee scheme. You have a guarantee of 75% of the loan, and up to 10 lakh rupee loans, the guarantee goes up to 80 and even 85% for those which are less than 5 lakh. So, it's a graded system. We have done more than 100,000 crores of loans in this current financial year.
It is massive.
So
Yes.
it is huge. I mean, we did 57,000 crores last year. Before that, it was all sort of 30,000 and 25,000. So I can only speak from
market is
these
ready.
numbers that the market is just, sort of huge. It's
I guess
exponential.
the one thing that is often, I think it needs more than a pure digital lens to the market. That's very important, and all of you here represent like hundreds of millions of touch points on the ground, which completes the picture, and that's an important point to focus on. I know I'm conscious of time. I'm going to very quickly go around, maybe, Raman, one point on where SIDBI is poised from a futuristic standpoint. How would you look to capture the next 20-year opportunity? What would be the big focus there? And then I'll...
Yeah, I think from our standpoint, it is certainly, direct lending, but our catalytic role will really come about if we were to do something similar to what we did with the MFIs. And this time, I think our focus is really on green finance. So between an electric vehicle to a solar rooftop, whether it's on a business or a residence, where you have these companies called ESCOs, energy saving companies, or RESCOs, rooftop energy saving companies. There are a host of them in India. They are happy to put up the plant on a residence and give a lease rent to the residents. So, there is a burgeoning amount of work that's happening in the green space. Interest rates need to come down a bit. But again, I'll say that if 25 crore households can each get an EV, I think we'd have done a phenomenal job. And for that, we need probably another 100 NBFCs to come into fold. I
mean, and there's no green transition happening without including these households, right? So, absolutely. And we need distribution into them. Munish, from your standpoint, what's your outlook?
See, we are Axis Bank, we are a full-blown, full services bank. And, when we say Bharat Banking, sometimes one construes it as saying, only agriculture or microfinance, etc. But it's not that. We count on doing pretty much everything that a bank can do for its customers in these markets, right? So for us, Bharat Banking is a big initiative. We think that the demand, the consumption story, etc., is going to play out fully in the next few years. I personally think that if India is continuing to grow at 12-13% nominally, we will create an India which has gotten created in 75 years in the next 7 years again. So one full India is going to get created in the next 7 years, and possibilities are for everybody to see. And we think we could play a bigger role in helping India achieve its potential in these markets. And for us, as an outcome, we see ourselves, fully and deeply in there from a full purpose or all service bank in these markets.
Thanks. Before, I'm going to let you have the last word, Utpal, since you're the youngest organization out here. But we as investors are supposed to be ahead of the curve in spotting future trends. And I think I'll let Utpal talk a bit about the concept of core transaction value and how you see that, because you've gone through the report and you had some reactions. But I think this is a good wake-up call for all of us to say there is a massive trend that is not to be missed. In fact, it's probably going to fast-track everything that's happening over the next 20 years, right? But over to you on your sense of the transactional activity maybe you see on the ground, which is your opportunity.
I think you guys severely underballed that number, by a factor of easily 4, 5, 6. I don't know how much actually. And if you want to really test this hypothesis or test this statement, just take any market. We've all seen lots of markets. don't look at, your shopping malls only, but let's take any dense market that you know, small town. Don't take metros, take small town. Walk that market, just do a transact in that market. 10 feet wide shops, right? So in a kilometer, you have about 300 of those shops across. You go 1 square kilometer, you would have more than 1,000 shops. Any estimate that you want to make, take 100 footfall, 2,000 rupees, 1,000 rupees average purchase, etc., and just do the maths yourself and convert it into billions of dollars quickly. Otherwise, your calculators will run out of space actually on that. And that is really what we see as the opportunity of emerging India, be it urban, semi-urban, rural, metro. It doesn't really matter. It cuts across. And what we've now seen over the last 10, 15 years is more and more movement from below poverty line into this aspiring middle class of households. Here, as well as, in the villages in rural Assam that we spoke about earlier. It is this opportunity that keeps us awake, and we are going to be spending the next 5, 10, 15 years, whatever, God gives us. In being able to prove a model that is seen by everybody else, because as Mr. Raman rightly said, we don't need 100, we need thousands, maybe tens of thousands of organizations to really be able to do justice to such CTV. We just hope to be one of them on the leading the curve from there.
What Utpal did not mention is he did the CTV math on a 1 kilometer radius dense old market and arrived at a north of $11 trillion number if you take about 5,000 such square kilometers in India, which is an easy one. Yeah. So I conclude by saying our report is probably off by a margin. So.
Yeah, see, just the larger towns would have 10, 12 of those markets. What you call as tier 3 or 4 towns would have 2 or 3 of such markets. And rest of the, census towns, which are about 4,000 of them, would have at least one such market, right?
But just think of the fact that you could, just sitting here, add many zeros to our GDP. Because a lot of that is just not in the formal system.
True. Anyway, thank you so much. Thanks a lot, and this was wonderful. There's so much more depth to all of this than we are just scratching the surface even in this conversation. Thank you so much.